What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we hit our downside price targets and we're also starting to test the June lows. Are we going to see strong support at this critical risk level, or are we going to break down and put in lower price targets? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday in SPY we were down 1.68%. And as you can see, we did reach our price target, which was right here at 368.5. And intraday, we did start testing the June lows right around 365. And we did bounce and close above the June low, which is that price target there at 365.86. So at this point, whether or not the bottom is in, we are going to know very soon. And all you need to know in your trade plan is you need to set your risk at the June lows, because if we bounce off this level, there is the possibility that we do get a W-shaped bottom, which is going to look like a very large double bottom off of the June lows in the long term. And as you can tell, we are extremely oversold right now, well below the lower Bollinger Band and well below all of our moving averages. So there is the possibility we do need to bounce a little bit in the short term. So I'm going to go ahead and delete the arrow because we did reach our price target. And right now, all eyes are on the risk level at the June lows, because if we break below that, we are very likely going to get some type of capitulation event, which is basically we have no relief in sight until we hit the price target to the downside, which right now I do have at SPY 350. If you've never seen capitulation, it's a lot like what we had back in June, but it doesn't have any end in sight, and you just continue to sell off until the market gets to where it wants to be. So in June, that was a very painful sell-off where we went down very quickly and left very large gaps to the upside as everybody was running from the door and getting liquidated out of their long positions. But as you can tell, after a capitulation event, you usually do get a very strong rally that you do not want to miss. So coming up in the next few trading days, if we do start to break below the June lows, just be prepared to see selling picking up, because there are going to be a lot of long positions that start to get stopped out as we break down. And that is going to lead to the capitulation, because there is going to be a lot of volume and a lot of selling that is going to allow the selling volume to pick up. And that is going to move price action down very quickly. Now, there is still the possibility, because we are so oversold, that we do need to bounce. And then we could still reach some type of capitulation event after we bounce. So basically, all you need to do is know if we break below those June lows, you are looking for some type of very dramatic sell-off. So for that reason, you have very well-defined risk right here at the June lows. So you can take long positions. And if you do want to short this market, I would wait until we break down below the June lows, because you're going to have much more clear direction in the price action that we're going lower if you wait for confirmation in the price action. So no matter how you play this, whether you're waiting to go short or if you're trying to go long, your risk level is right there at 365, because that is going to be your level above or below that you need to manage risk from. To the upside, we want to look for this gap close right around 373.5 and the resistance zone around the previous breakdown just below 385. And then of course our risk level all the way up there at 390 is the risk level we need to break to start breaking the downtrend. Remember, I always tell you these are downtrends until they're not, and that's just to help you understand there is no reason going against the downtrend for any prolonged period of time. So if you're taking long trades off this critical risk level, there is no reason to assume that we're breaking the downtrend and trying to swing that long position for any prolonged period of time. It's a downtrend, so the saying is buy the dip and sell the rip. Because you're going lower in the longer term, there is no reason, unless you're an investor that is trying to accumulate and willing to hold for 12 months or longer, there is no reason to hold those long positions while you're in a downtrend. So respect the downtrend of clear lower highs and lower lows, and definitely look for much lower prices if we start breaking that June low. On the NASDAQ 100 triple Qs, we were down 1.63%, and you can see the triple Qs did not yet reach the price target at 267.5, even though we did reach the downside price target in SPY. Whether or not that means SPY is going lower because the triple Qs have more downside to go is to be determined. So right now, manage a risk from the June lows on the triple Qs, which is right here at 271. If we break 271, we could slice right through the price target at 267 and go straight to the next price target at 258. But like I said before, it is possible we bounce in the short term before we go any lower. So to the upside, look for the gap fill around 279. Resistance will be around 280 and 284. And our critical risk level is still all the way up there at 293. So we are expecting a downtrend as long as the triple Qs are below 293, with the possibility of getting to our price targets at 267.5 and 258. We are extremely oversold, so it is possible we bounce in the short term, but do not forget to sell the rip if you're going long because we are still in a strong downtrend. In the Dow Jones, we were down 1.55%, and you could see the Dow Jones also reached our downside price target, which was right there at 293.5, and as I told you, that did undercut the June lows. Now, whether or not this means SPY and the triple Qs are also going to undercut the June lows is to be determined, but remember the Dow Jones still has this gap to fill to the downside at 285, so there could be the possibility if we break 293 that we are going to fill that gap at 285. We're extremely oversold in the short term, so we could bounce before we go any lower with the upside gap fill around 300 and strong resistance around 305.8 and our critical risk level at 312. So as you can tell, the Dow Jones breaking below the June low is an ominous sign that we could be getting ready to see capitulation in another leg lower. So just be very cautious and know these critical risk levels that I'm giving you, and you want to manage your risk around those June lows. On the Russell 2000 IWM ETF, we were down 2.38%, and the Russell 2000 also met the downside price target at 165, and we're very close to the June lows at 163.75. So again, you're looking for more capitulation, risk off type selling if we break the June lows, and you can see we are selling off on increasing volume, but we are extremely oversold with a very high likelihood we need to bounce to fill the gap in the short term, right around 171, and then we'll have critical resistance around 174.7, and then that critical risk level at 178. So as long as we're below 178, you should be expecting lower highs and lower lows, so do not be trying to swing long positions for any prolonged amount of time. On the ARKK ETF, we were down 2.02%, and ARKK is very close to the June lows, which is right there at 36.5, and if that level breaks, you're looking for the next leg lower at 33.7. Upside resistance is $40.43, and we need to break above 43 to break the resistance trend line. On the VIX, we were up 9.4%, and the VIX was all the way up there around 32 at one point, but we did close just below 30, and I continue to warn you that the VIX above 30 is very likely going to be our capitulation bear market scenario where we break down below the June lows. However, it is likely the VIX is going to crush in the short term as we get a relief bounce, so you will need to remain cautious while the VIX is above 24, and the only time we can get more bullish will be when the VIX crushes all the way down below 24 and we start to see fear leaving the market. Remember, I was talking about the VIX having a flat top and a rising bottom, and we have a very clear breakout of that triangle, which does tell us volatility could be just now starting to break out and it's here to stay. On Bitcoin, we're currently down about 0.5%, with Bitcoin still holding that support zone around 19,000, which is actually very surprising that Bitcoin is holding up this well considering the stock market is still selling off. This could be a sign that there is going to be a good chance the June lows hold because we know Bitcoin is a risk-on asset, and clearly we are seeing a lot of demand around this zone. If Bitcoin breaks about 18,500, look for the next leg lower at 17,000, and the critical resistance is still all the way up here at 21,600 and 22,000. On Amazon stock, we were down 3.01%, and Amazon did reach our price target at 115 and even closed below it, so we are getting extremely oversold. If we continue to go lower, the next support will be 106 and then 102, and the upside price target will be that gap fill at 126. On Microsoft stock, we were down 1.27%, and Microsoft continues to close below 242, which is our risk level, which increases the probability it's trying to get to 231. We can get more bullish above 242 for a test of resistance at 252, and as you can tell, we are clearly closing below the June lows, and this is a very large cap blue chip name that does move the markets, so we will want to see Microsoft getting stronger in the near term to support the bulls. Otherwise, we are going lower in the indices as Microsoft goes to 231. On Nvidia, we were down 0.36%, so Nvidia does seem like it is running out of sellers around this zone in the 120s, which means we could hold this level as support, and it is starting to look like a falling wedge, which could mean we are going to see a bounce in the short term. So in a falling wedge, you're looking for a breakout, which means we could start to break the downtrend, we could run out of sellers, and we could run all the way back up there to about 145. So that's what I would be looking for, managing a risk around the low around 122 to 123. Upside resistance levels will be 129 and 135, and that gap fill at 142. On Tesla stock, we were down 4.59% as Tesla did break the right shoulder support at 283, which means we're very likely testing the low here at 270. Below 270, you're looking for support at 258 and the gap fill at 251. So keep that in mind. If we break 270, it is very likely that we're going to about 251 to close the gap. If we bounce off 270, you're looking for upside resistance at 283 and then 296. and you do want to be risk off while we're below 283 because there is the possibility that we are reaching a double top, which will be confirmed if we break the neckline at 270. On Apple stock, we were down 1.51% as Apple is back down below the risk level at 154, but it does look possible that we're retesting the lows around 150, and so far those levels are holding up. If we break 150, the next leg lower will be 147, and in order to get bullish, we need to break the resistance trend line, which is now at 156. On the financial sector, we were down 1.58% as the financial sector has finally closed the gap to the downside, which is just below 31, and so far we are getting extremely oversold as we find support around that zone. With the gap to the downside now closed, it is increasingly likely that we're getting ready to bounce to close the gap to the upside. So this could be a sign that the financial sector is reaching a very nice risk reward ratio for a lot of upside and potentially less downside. On the industrials, we were down 1.88% as the industrials did break down below the support, which looks like they are trying to come down here to close the gap to the downside, but we may need to bounce in the short term before we go lower to close that gap. The healthcare sector was down 0.51%, continuing to close below 125 and very likely trending down towards support at 120. The energy sector was down 6.9%, getting very close to our price target to close the gap at 69, which we were expecting as we started to see price action breaking down below the 50 daily moving average, and we lost our support trend line. So continue to expect lower prices until we fully fill that gap, and then we possibly could start to bounce yet again. So jumping back over to the S&P 500, without a doubt, the market is testing very critical risk levels, but do not panic and do not trade with hope. Simply know your trade plan if we break below the June lows, and know your trade plan if we blast off and get a very strong bounce off the June lows. There's no reason to panic, and if you are panicking, you are either over leveraged, you're on the wrong side of the trade, or you do not have a plan. Go to the drawing board, know these critical levels that I give you each and every day, and draw up a plan of what you're going to do in either scenario, and then act on that plan, and you will have a lot less emotions when the time comes to actually make the trade. If you make a trade plan, you know every entry and exit for every scenario that I go over. You will have a very smooth ride in this market. Even though you will not guaranteed to win every trade, you will still have a plan and you will be managing your risk, and you will become a better disciplined and profitable trader over time. Also, don't forget I still have 50% off promotion code for your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to receive 50% off your first month of bank. Bank sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. If you want to join Bank or the Stocks Channel Discord, you can find out all of the information by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.